From the morning reading, the SPX pauses as oil pulls back. VIX falls. One of 10 sectors moved higher on Thursday. XLV, XLF, and XLP were the strongest sectors, while XLI was the weakest sector. Oil futures fell $1.06 to close at $50.61. Breadth weakened compared to the prior session as decliners led 1724 to 1258 on the New York Stock Exchange and led 1479 to 1274 on the NASDAQ. The SPX and SPY opened lower and sold off early on light volume, but rallied to close above daily lows. VIX closed lower and did not confirm Thursday's pullback. On that S&P 500 snapshot, it was struggling with short-term resistance. U.S. equity markets posted modest losses, performing worse than most Asian and European markets. The 13K rise in weekless jobless claims was no help to the market, and the plunge in oil was also a contributing factor, with West Texas Intermediate crude down 2.3%. The S&P 500 stuttered at the open and hit its negative 0.51% intraday low a little over an hour later. Some buy the dip action lifted the index to its 0.13% lunch hour high, then struggled with the flat line during the afternoon and closed the day with a 0.14% loss. For the three sessions, the 2144 price level has alternated between support and resistance. We'll see what the next session brings. The yield on the 10-year note closed at 1.76%, unchanged from the previous close. Also in the morning reading, high-yield bonds are holding up while stocks slide. Over the past month, junk bonds have rallied strongly, pushing the high-yield spread over treasuries down by more than 10%. Stocks normally rally when bonds do that, but instead the S&P is showing a return of almost negative 1%. Almost everyone suggests that this is good for stocks because the bond market is smarter, but if we actually look at prior instances, this hasn't been the case. Active investor managers aren't sure what to do. At least that's the suggestion when we look at the aggregate response in the weekly NAAIM survey. The deviation among responses in the survey is the most extreme since 2009. That doesn't tell us a whole lot, but the few times managers were holding above average exposure and not very confident, stocks struggled, but we won't read much into that. Microsoft is set up to gap higher on Friday. After its earnings release on Thursday, traders are pushing the third largest stock in the U.S. to a new high. Over the past decade, Microsoft has struggled in the short term after gapping up so much after an earnings release, especially if it was at an all-time high at the time. ETF traders are moving back to Mexico. The exodus from the main Mexico fund, EWW, on September 15th was highlighted. Fund flows since then have been pretty flat, but nearly 100 million moved into it in recent days, one of the largest inflows in years. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:13 a.m. Mountain Time, and I am recording this in preparation for the market day of October the 21st, 2016. Remember that Remember that on YouTube you can have a free subscription to the channel and be alerted to new content being published. Give the video a few minutes after being published for the video to be available in high definition. Clicking on the setting button to choose the high definition playback level. In the same area, you can also control the speed of the playback. I routinely find that I can fully understand videos at about 1.5x the recorded speed. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's get into the morning report. And at the time of this cut, the broad market was generally down, with S&P futures down about 1/3%, the Russell's down about 0.4%, NASDAQ down just below scratch, Dow futures are down about 0.25%. Crude oil's up about 0.5%. Euro's down about 1/3%. Bonds are at scratch, and gold is just below scratch. In overseas action, China is up about 1/4%. Hong Kong looks to be closed. Japan is down about 1/3%. Germany down just below scratch. United Kingdom up about 1/3%. There's no significant U.S. macroeconomic reports out today, so nothing to worry about from that front. In terms of the volatility conditions, short-term VIX down to an 11.07. Skew still benign, below the 125 threshold. IV percentiles across all four markets are in the lower quarter of the annual range, with the S&P futures, or S&P I should say, at a 22, the Russell at 21, the NASDAQ at 18, and the Dow at a 23. Another trading session with no standard deviation size moves on a close-to-close basis. That's now 7 sessions in a row. Generally, when we start seeing this large and extended group of trading days without standard deviation size moves, we're probably pretty much expecting an expansion of volatility. So kind of keep that in mind. This is probably being further influenced by the election, so this might stay coiled for a bit longer than is typical. But anyhow, this is kind of an unusual circumstance, so look for something to expand at some point in the future here. Let's go ahead and go to the charts. There you go. S&P futures, again, more indecision, and we've talked about the term finely balanced. Well, you don't get more finely balanced than a doji in the middle of a cloud. This is as neutral as it gets. So far today, our overnight into the morning action is relatively negative, still in the cloud. You see the clouds starting to get really, really thin. And again, kind of a reflection of that very, very neutral, finely balanced kind of action. There's just almost nothing in a range to speak of in the recent 26 days of trading activity. Especially once you drop these candles here, this is going to get quite compressed, and that's what you're seeing reflected out over here. So, wow, there's just not much to say about that. And the Dow, of course, is very much the same kind of reflection, just about as neutral and finely balanced as you can get. Normally, we would say something about the, coming down out of the cloud, but this is frankly so flat, and all the indicators here that it just doesn't mean very much other than it's finely balanced. It doesn't give us much direction as to which way it might go, I guess is my primary point. NASDAQ, again, we're above the cloud. We're still more bullish with this one than others, largely driven by Apple's performance. But still, bottom line, NASDAQ is the sum of its parts, and the parts right now are positive. And we would expect a continuation of that positiveness. We'll see if NASDAQ can certainly be able to drag the broader market up with it, or does the broader market now drag NASDAQ down to where it is? Certainly that's happened with the Russell. The Russell was positive and relatively bullish, but then finally kind of gave it up and deteriorated down into this negative to neutral cloud formation, much like the Dow and the S&P futures. We'll take a look at the other markets, see if they're giving us any indication. Certainly, crude oil has had some movement of lately, but kind of a false breakout at this point to set an intraday 52-week high, and pretty much gave all that back and went right back into the neutral stance between that prior swing high and the former resistance turn support area. So crude oil certainly is bullish, and yet at the same time seems to, at least in the short term, run out of energy and momentum. In terms of gold, gold had a bit of a bounce a few sessions earlier this week, but seems to have run into some overhead resistance and is at least consolidating. We'll see if this turns into a bear flag or if something more sustained to the bull side can be found. And then kind of the same situation with bonds. You have this kind of intermediate term falling pattern for the bears, and the question is can this be a bottom and start to form higher highs and higher lows? The odds are against that. You're below the cloud. All the moving average lines are above you. A lot of overhead resistance. This would seem to say that the expectation would be that bonds would fall, which would seem to indicate that the equities should be going up. So we'll likely see this sideways action continue until the overall market does pick a direction. But nothing really in bonds that tells us that it's about to happen at this point. And then volatility continues to kind of get crushed from the earlier bit of a spike. And during the day yesterday was down below 14, and right now is trading right around the 14 handle. So this is certainly getting relatively low. It can certainly settle down into even lower levels, and the 12 to 11 area is relatively common during bull times. So we're not quite there, but there's not a lot of fear premium. That's probably the primary takeaway at this point, is that there's just not that much fear in the market. While perhaps an expectation of the election outcome could cause some short-term volatility, for the most part, the market doesn't seem to be fearful of any of the potential outcomes that the market would be pricing in. That should be enough on that. Let's go ahead and go to the daily report, and not a lot of changes from yesterday. Market phase 5 still, the break of diagonal support. We have not had that break of horizontal support, and that would probably lead to an increase in hedge risk level. That hasn't happened yet, though, so the bulls have been able to maintain a modicum of support. In terms of the three market timing signals, no change from yesterday. The first signal from IBD, uptrend under pressure, is in warning status. The GMI index, a 1 out of 6, very weak, with a sell signal that's been in place since 10-12. Stock charts decision point scoreboard, very, very weak. And we might at best call this neutral to bearish. And you see the signals on the S&P 500, 100, and also the Dow in the short to intermediate term are all neutral to bearish with a mixed long-term profile. NASDAQ is a bit more bullish, but you have to go the intermediate term time frame to even find that. In terms of the consensus of those three opinions, I would say that the current consensus is neutral to slightly bearish. And not a lot there for the bulls to hang their hats on, so kind of keep that in mind. Position sizing opinions, both are at the same place they were yesterday, 50 and 75%. Intermediate term market posture continues to be a very weak bull signal up against a weak bear longer term sentiment line. You can see the numbers here, 30.7, Dow 33. Russell's even still in a severely strong bear on that intermediate term posture. In terms of hedge warning status, still at level 2, the conditions are present for a significant deterioration in the market in the near term. Has not happened. This is not a probability that that will happen, but it is a recognition that conditions are present, that those circumstances could happen in a relatively short period of time. And the essence of it is, if we were to break the horizontal support that the bulls have thus far been able to hold, we would probably see the doors open for a potential even 100-point move to the downside, at which point you certainly would be in level 3 hedge risk level. In terms of strategy opinions, option income strategies, cover calls, put selling, all the same opinion as yesterday. Overall conditions are pretty dicey for novice traders to initiate new positions in any of these strategies. More aggressive traders, more experienced traders might use relatively defensive structures to be able to participate in current trading conditions. In terms of specific warnings, this is the weird part, and this is where the finely balanced comes in. Here we are at hedge risk level 2, and yet at the same time the volatility area is very, very benign. The only thing that's showing in red at all is a relatively high distribution day count on the S&P at a 6. In the trend-based area, you had the market phase 5. That's not good. In terms of the key intermarket risk aversion indicators, all 5 of those indicators are currently in a position of risk off. Sentiment, relatively benign, and you see 5, and this is on a scale of 1 to 10, on stocks short and intermediate term. And the fear and greed index did slip a little bit yesterday to a 38, but it's been kind of hovering in this general area now for about a week. In terms of the sector specific, you see healthcare did well yesterday, but other than that, you know, you really had to be kind of isolated situations. Certainly no other sector really stood out. No other sector was positive. And for most of the sectors, it was probably a little over 50% of its holdings were negative for the day. But other than telecom, which was affected by some rumors related to a potential merger that drug that sector down. Remember, the company that does the acquisition is generally thought to always pay too much. So their stock value usually goes down, while the company that's being acquired, in this case, the rumor is that Time Warner would be acquired by AT&T. The Time Warner is up because they're being, you know, overpaid for. So those stockholders would benefit in a merger sequence. So that brought down the telecom sector, and you can see down 2% there. And in the market postures, you see some improvement. We've got more neutrals here and even some green in the energy and financials. And perhaps those two sectors are probably the most consistent. And if anybody's going to be green, it seems to be those two in recent weeks. And you see, though, that that performance is hard to come by in terms of being able to achieve anything over periods of time, but you see energy here mostly positive in the 5-day, 1 month, 3 month, but just barely on the 3 month. Financials a little bit more strongly bullish in the 3 month period, and showing some consistency across the other time frames. Whereas all the other sectors are in general, you know, negative. Information technology, perhaps the example of an exception to the bullish side. And that should be enough for today. Let's go ahead and wrap this up. I mentioned at the beginning, and I'll just kind of point to this right here, about the YouTube channel. If you've not subscribed to the YouTube channel, it's free. So, you know, there's no concern about, you know, committing to some obligation or cost. There are a lot of YouTube channels out there, but it's basically a dedicated area where we post content. And, you know, if you do subscribe, and all you have to do is hit the red button there, you just go to this website, hit that red button, that'll get you in as a subscriber to that channel's content. And then when you do that, you'll get notice when content has been published. Also note that in the little gears, there are some tools. And if you'll make sure that you're watching it in high def, it'll have a little HD. That'll give you the best resolution. That usually takes a few moments to be available once content is published, to actually be available in high def. So just be sure that if you start to listen to it immediately, there's almost always some morning reading at the beginning, and you know, you're not looking at charts and all, but make sure you switch it to high def as I start to get into some of those charts and all. The other thing is that in the tools is the ability to change the video playback speed, and I would suggest you can usually listen at about 1.5x. Frankly, you can listen faster than I can talk, So that helps you listen to about a 20-minute video in roughly 13 minutes. So that might help with your morning routine. So just something to keep in mind there. Now I'll scroll through the rest of these. We're coming right up on 20 minutes now. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and then also note the hyperlink that takes you to the full set of disclosures. We'll see you back here for Monday morning's market preview by Falcon Global. In the meantime, manage that risk profile, and if you do, everything else should fall into place. Go learn something, and we'll see you soon.